For 20 years, we've been creating innovation in the CX industry, and now we're seeking out brilliant new perspectives on CX you just won't find anywhere else. I'm Richard Owen. Welcome to the CX Iconoclast. My guest today, Simon Paris, is CEO of Europe's third largest software company, Finastra, where he's enjoyed a 9-year career following his successful 8 years at SAP as president of their industry cloud division. Now, that's quite a tenure in the software industry. So as you can imagine, Simon's enjoyed a bird's eye view, not just on changes in the software technology industry, but also in the financial services industry that represents his customer base. It's clear from the start of our conversation that Simon puts great stock in a concept called open finance, which can be thought of as a shift from product-centric to more customer-centric solutions. And this shift should resonate with just about anyone who is seeking a similar change in approach in their industry. But we do also get to touch on some of the opportunities and risks associated with artificial intelligence technologies, including generative, within the financial services industry in particular. I was particularly drawn to Simon's rather convincing articulation of purpose for Finastra, which can so easily be a bromide, but I think in this case, sounds sincere and motivational, and I certainly bought into it. I suspect you will too. Enjoy the conversation. Well, Simon, thank you very much for joining us today, and welcome to the podcast series.
Thank you for having me. Good to be here.
Let's start with the basics. Perhaps give you a chance to explain to people who might not be as familiar with the brand a bit about Finastra, and then we can I think I'd love your thoughts on how the overall finance industry is shaping up and the role you guys play in that.
So I thought you were going to give me an easy question to kick things off, but here goes. So Finastra is a global enterprise software company. We primarily sell enterprise software to banks, but not only banks, anyone who's involved in banking. Specifically, we do 4 things. We provide the software that runs lending, payments, treasury and capital markets, and also what you might call retail and digital banking. Actually, all over the world, our software is deployed in more than 130 countries. We employ about 8,000 people. I think today we're the third largest software company in Europe, and we have just under $2 billion of revenue.
Third largest software company in Europe. That's quite a story. And I think you had experience. SAP's got to be the biggest software company.
I think the stack rank, we're certainly top 5, but I think the stack rank would be SAP, followed by Dassault Systems, followed by either us or Sage PLC. And then there's a couple over $1 billion, but not that many in Europe.
That's absolutely brilliant. And I think people probably aren't as familiar with the scale of the enterprise as certainly here in the United States, where I'm talking from this morning. One of the things I noticed when I was looking at your background is you'd spent some time and you put together a very comprehensive video talking about open banking or open finance, and this was something that's clearly central to the business and certainly where you're leading the business. Could you talk a bit about what that means?
Yes. In fact, probably the best way of explaining open finance is to use an anecdote. So actually, before COVID, it was literally 2 weeks before, where I was in New York City, March 2020. And we had 2 banks, a regulator, a couple of fintechs, and myself on stage in New York City in a panel format. And I was asking, what do you understand by open banking? What do you understand by open finance? And the regulator said, well, this is PSD2, right? We love our acronyms. And everyone said, well, what's that? And the answer was, well, that's when you exposed account-based information services and payment information services at the wish of the customer to whoever wants it. The banks were nodding. The fintechs were shaking their heads. So I said, dear fintechs, you seem to be in disagreement. Why are you in disagreement? And they said, because you're missing the point. The point is, if I am buying a home, the financial service is not a mortgage. It is a home buying experience. I need somebody to help me find the home in the zip code that I can afford, show me all recent transactions, help craft a mortgage that suits me as an entrepreneur, move me into that house, optimize my utility bills, and maybe, just maybe, not one of those services came from the bank. They were assembled to my persona for the customer journey that I am on, centered on my interests. They assembled the solution that most fits me. So that's how we subscribe to open finance. It's this idea of unbundling banking services to rebundle them around the persona for a given customer journey.
So, another way of framing that might be that to some extent you're putting the customer back in the center of the frame as distinct from the products and sort of building the products around the customer.
100%. It's putting the customer back at the center and also changing your mindset. I think it was the former CEO of ING who said, we need to think about manufacturing and distribution. Why does a bank manufacture a product, let's call it a mortgage, that it only sells through its distribution channels, through its branches and through its agents? Why would the bank not manufacture and distribute through anyone and also distribute from anyone? And why wouldn't we put the customer back at the center and assemble around them? That is putting the customer back at the center of the financial service, corporate or personal.
Is it controversial as an idea? I mean, it sounds like in most industries you'd say, okay, that is basically how industries should operate. But in financial services, it seems like the industry comes from a long legacy of not necessarily thinking of customers at the center of the equation. Is that fair?
It's certainly fair to say that banking has come from a background where I am the head of cards, I'm the head of payments, I'm the head of mortgage, a very product-centric view of the world. Also a view where if we don't make it, we don't sell it. So what I find interesting in banking is to use analogs from other industries. So for example, I enjoy motor cars. And if you take a Porsche 911, for example, and you explode it in your mind's eye into all its component parts, you can ask yourself a very interesting question, which is what did Porsche actually make? They didn't make the wheels, they didn't make the brakes, they didn't make the ignition, they didn't make the glass, they didn't make the tires, they didn't make the upholstery. What did they really make, right? They actually made the engine and the chassis. Or in software language, they made the application and the platform. Everything else is assembled to that customer. You want a convertible, you get a convertible. You want 4 doors, you get 4 doors. You want electric, you get electric. But it's assembled to persona.
Yeah, it's funny. I mean, both Morris and I have backgrounds in the personal computer industry, and you can argue the personal computers they've always been assembled product at the end of the day. We never really built anything. We didn't do our own software. We didn't build our own components. But the crucial thing was we managed the relationship with the customer and the ability to match the solution to the customer requirements. Sounds like a very, very similar parallel to where finance should be going.
Yes. In fact, there's a thought leader called Paolo Cerroni from the IBM, I think it's called Global Think Institute or Global Think Tank. And he talks a lot about what's called contextual versus conscious banking. So conscious banking, I've chosen to take a product from my bank consciously. Contextual is a banking service is made available to me at the point I need it without me necessarily knowing where it came from. A phenomenon of that could be the buy now, pay later. You're checking out and it says, do you want to pay over 10 installments? You don't really know who's giving the financing, but it's contextual to your purchase.
Yeah, I mean, that's a great example, right? Because that's an area where historically that was a complicated and difficult process to obtain financing on a purchase. And on a small purchase, simply impractical. And now, theoretically, and it doesn't always work as smoothly as I think the buy now, pay later crowd would like, but in theory, click, 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 and it's part of your shopping cart, and it's a seamless financing experience on purchase. But that's coming from innovators, right? And that's another question, really, is most of the innovation coming from fintech companies or startups or challenger organizations, or is it now going to be return of the sort of the bigger financial institutions are going to get wise to this and start to bake it into their approaches?
Or a combination of both.
Yeah.
So I think you're right. The phases of fintech innovation, phase one was very much fintech attacking the most profitable revenue streams of banking, namely payments and lending. Wave two, if you like, was, well, the market's corrected and everybody wants a provider who's going to be profitable and sustainable over time. And phase three, I think, is this combination back to the Porsche motor car. Porsche will never build, in my opinion, a GPS. They'll always consume it. And what banks and fintechs are realizing is that symbiosis, that cohabitation between them is probably the best outcome for everybody, particularly if combined with putting the customer at the center.
And this is all set against the backdrop of regulatory environments, of course, which can both facilitate but also stifle any efforts to change things. And that's going to vary, I would imagine, geographically quite significantly. You're going to have a different regulatory environment here in the States than you would in Europe. So is that moving in the right direction?
So generally speaking, I'm a big fan of regulation as a driver of open banking. So as you think about concepts like eliminating bias, why should a person of a different skin color pay a higher interest rate, or of a different gender pay a different interest rate? So removing algorithmic bias, for example, is a great example of where regulation is your friend. Making lending more affordable, more transparent, more accessible, great example of where regulation can be your friend. Forcing people to embrace open banking so the customer can decide what data at what time is exposed to what third party is a form of empowerment, putting the data of the customer back into the customer's hands. So it's easy to take out the stick and hit regulation, but I think if you look at it holistically, it's actually it can be a force for good, a force for change.
That's probably the most positive interpretation I've heard of regulation in financial services ever. So that's a nice optimistic point of view. I
Well,
think
I think
typically in Silicon Valley, the mentality is always right, break things, and that's had negative consequences as well.
yes, I think we're all of a similar vintage. So if we remember 2008, we don't want to relive that. If we remember 1998, we don't want to relive that. 1993, we don't want to relive that. So there are learnings from our past that some are want to forget, but many of us actually want to learn from.
Yeah, well put. Let me change gears a little bit and talk a bit about the impact of generative AI technologies in the financial services industry and your perspective on that. And you may not have realized when we were pre warming up for this call, that wasn't actually Maurice Fitzgerald. That was a deep fake version of Maurice that was setting this whole thing up. But there's legitimate anxieties and opportunities associated with this, right? This is not necessarily good, although the potential seems massive. What's your perspective?
So starting with your last point first, I remember I took out a number of PhDs for dinner in Paris pre-COVID, and I asked them, I said, what are you most excited about in terms of generative AI? And what are you most fearful of? In terms of what they're most excited about, they could not agree. It was just too much to be excited about. Just too much. They couldn't agree on a single thing. It was just too exciting. In terms of what they were fearful of, they were unanimous, and it was deepfake. They were worried about the power of deepfake. And, I heard the language. This is the last year we will have human-based elections. We will struggle to distinguish the advice we're receiving as being real or not real. And, was it deliberately toned and tuned just for us as an audience of one? It's a terrifying prospect. So I thought they were very forward thinking to say that 4 years ago. Now, to your first question, how do I see generative AI in financial services? I'm in the camp of, hugely excited. So I think about us as a global enterprise software player. We see kind of three big categories of use cases. So category one, in no particular order. Category one is what we call the enterprise category. So we can use generative AI to read and interpret contracts, to write compliance letters, to create marketing collateral, to handle customer support calls, to deflect complex inquiries, to interpret a complex financial model. It really is a productivity tool that's very, very promising in the enterprise space. Category two is really around the engineering and software developers, which is the ability to help either refactor old code to new code or to help write code. But the most beautiful phrase I heard in engineering was it can bring back the joy to work. So the work that engineers don't like doing, for example, documentation or source code filing or, red hat, red team, blue team all the
What
time.
engineers don't like documentation?
Yeah, I know. But this phrase of bringing back the joy to work, that was beautiful. So you do see kind of 30-40% productivity improvements, and you see higher levels of improvements in your best engineers, best developers, but everyone improves. So that's very exciting as category two. Category three is around how do you leverage generative AI in the product? Now, there are obvious cases about making it simple to engage with, deflecting customer support. But the argument that I'm most subscribing to is generative AI will become the user interface. It will be how we communicate with complex software in natural language. So if you take, for example, very complex tasks like capital markets, you've got equities, fixed income, money market, exotics, derivatives, the ability for a trader to interact with that system and just ask plain English languages. What was the best trade that I've done? Or what was the last time this currency traded at this level? Or how should I think about, and then to go and interrogate systems and bring that back in plain English. So this idea that this is the Gen AI UI, CX of the future, I think is very intriguing.
Yeah, it's very interesting. There was a piece I was reading, I think this morning, came out of MIT, where all good publications come out of. And it was actually from Andrew Lowe, who is, you may know Andrew, very credible professor in finance there. And the question was, could generative AI provide a substitute for sort of wealth management expertise and sort of financial advice? And, I think that the discussion back and forth was, well, it's clearly the case that any form of technology can enhance the interaction between financial advisors and their customers, but also potentially replace them, right? At some level, there's an ability to sort of make jobs more productive, but there's also a potential to simply eliminate some of the work that's being done.
I heard an argument the other day, which I think I subscribed to. It was a gentleman who said, we have 5 brains, now we have 6. So we said, explain what you mean. He said, well, the first is the brain at the back, which he referred to as the reptile brain,
Yep.
Fight or flight. The second was kind of the emotional brain, which is I subscribe and I belong and I wish. And then the third was the reasoning brain. And to get to 5, he said, then I include the heart. There's 40,000 neurons in the heart. There's 100,000 neurons in the gut. That's where we say, follow your gut. It actually has 100,000 neurons. The 6th brain, of course, is the AI that sits behind us all. So it's our individual personal assistant. So if I often say to my executive team, executives get paid to exercise judgment with inadequate data, then generative AI can maybe help with inadequate data when combined with those 5 other brains, when you treat it as brain 6 behind you.
That's I'd never heard it framed that way. I think this issue of AI assisting decision making is at the heart of where a lot of the potential comes, and not just the executive level, right? At the potential where individuals, potentially customer facing individuals, have an ability to make better decisions because they have better information, they have nudging in the right direction. We were recently mourning the loss of Daniel Kahneman, who was really probably one of his biggest contributions as an economist was to talk about nudging people and the power of sort of being not too directive, but giving them some decision spaces that enabled them to move in the right direction. So we could easily see, couldn't we, employees across the enterprise taking advantage of all sorts of AI technologies to make better decisions than they would have done without that.
Yeah, 100%. In fact, one of our team, our chief AI officer, showed a simple slide that said, one of the things you have to do is choose your tool. Many people talk about generative AI, but they mean machine learning. Or many people talk about generative AI, but they mean AI. So he showed a simple circle saying this is AI from 1972, and it's essentially applied statistics. Then this is machine learning, and then this is deep learning and neural networks, and then this is generative AI. So, for example, machine learning is a wonderful capability, doesn't have too much compute, but it can learn to repair payments, for example. Every payment in the bank to repair it, if it gets ejected from the payment flow, is $30 to $70. But you can train a machine to learn error codes and improve what it does, and it doesn't need any generative AI capabilities, just machine learning. It's more than adequate. Or AI, going all the way out, can be very good for predictive next best action. What should I do now, right? Whereas generative AI, if you actually need something that can handle both inference and reasoning, then that becomes very interesting, which is if I'm going to a client meeting, I could say, hey, can you do a quick summary for me of the chairman's letter, the CEO letter, the recent financial report and accounts, the analyst interpretation, the relative share price, performance, and anything about the executive team. And I can get that done in 20 seconds. And that's very impressive. So I think there's a phrase which is choose your weapon, AI, machine learning, deep learning, or generative AI. And I think if we have that nudge, to use your language, we'll use the right tool for the right task.
Yeah, and I think that the availability of those tools is grown exponentially. But so the feasibility of it, the arms race, if you like, between some of the largest software providers on the platform side gives companies like yourself so much of a head start in being able to build things, because so much of the heavy lifting is being done by the Amazons, the Googles, the Microsofts. Yes. So that's, in some ways, we're much more capable of being able to build these technologies than we could have been 10, 15 years ago.
Absolutely. And that's the advantage of scale and centralization. 100 years ago, every factory would have its own power plant producing electricity. And then they realized it'd be better to have one larger plant that supplied electricity to all of them. So, everyone rushing off to make their own large language models and create data centers with massive compute and driving up the prices of the semiconductor chips and so on. I get it. However, it tends to scale. So we'll consume cloud compute and generative AI capabilities in the same way we'll consume electricity.
So you sit on both sides of the table in some ways. You're going to be building technologies that your customers will use to serve their customers better, but also within your own enterprise, you're obviously building a business that is going to be supporting these customers and customer centric. Does your business represent a test case then for how these things can be applied ultimately to your customers as well?
Great question. I would say it could and it should if we remember to focus on our customer's customer. Right? Sometimes we focus just on the customer, which is, dear bank, let me help you make better mortgages. Whereas maybe the better pitch is, dear bank, let me help you put your customer back at the center and design and execute a home buying customer journey. So it could and should. If we stop at the customer, we'd have left ourselves short. If we stop at the customer's customer and what they're actually trying to achieve, then yes, that would make us proud.
That's an interesting perspective around it. I think most companies don't get much further than understanding their own customers at best, and I think the software industry historically has still been sort of catching up as a customer-centric business. There are some companies that I think have led the way in this regard, but I think others have come from a rather, especially those that were born with the on-prem mentality that sort of said you sold customers a product, that product stayed sold, you might have charged rent at the rate of 15 to 20% a year, and really your customer was hostage forever. We've now entered an era where switching costs are different, competition is far, far higher. And so the customers had to shift to the center of the software industry, I would argue. And companies are still trying to catch up with that to some degree. And I think that the hyper-growth expectations of the software industry and the pressure to grow so quickly and doesn't that all add up to a difficult formula to some extent to figure out how to grow through the customer?
It does. The only way to resolve it is for leadership, particularly senior leadership, to focus on purpose, right? Which is, why are we selling trade finance software? To make a better quarter or to help pull millions of people out of poverty and into the global trade finance system, right? Now, the better quarter is a good answer, but it's inadequate, right? If we can remove trade finance friction and make it more accessible, reduce the average unit cost, and help eliminate corruption through digitization and bring hundreds of people out of poverty as you kind of deal with the $1.7 trillion trade finance gap, that's a noble purpose. And it inspires people to think beyond, okay, if I sell this software this quarter, we'll have a good quarter and I'll make my commission. Okay, it's good, but it's inadequate. We can really do well by doing good.
And when we started talking about open finance, one of the things that I actually did want to touch on was this issue of broader opportunities to expand financial services to people who've traditionally been unbanked in parts of the world in some ways that have been underserved because the infrastructure has never been in place. So do you see that as part of the open finance initiative, or is that an adjacency, this idea of reaching audiences that have traditionally been denied financial services?
Yeah, I don't think it's an adjacency. I think it's part of the central theme. So on Thursday last week, I was privileged to listen to Sven Smith from the McKinsey Global Institute giving just an unstructured dialogue. And he said something which just fascinated me, which ties to your point of unbanked and underbanked. He said, this is the first time in history that we have so few people below the poverty line. Poverty line being $2.50 per day. There's about 780 million people. Still a huge number. However, we have 4.8 billion people behind or below the empowerment line. Not something I'd heard of before. And the empowerment line apparently is at $12.50 per day. And the argument, which was just spectacular, is only when you are at the empowerment line are you able, or over and above the empowerment line, are you able to engage on topics that are relevant to society. Cleaning rivers, avoiding pollution, stopping fossil burning, moving from wood burning stoves to gas, whatever it might be. So he was calling us to a higher purpose, which is, yeah, poverty line looks good, but you're missing the point. There are 4.8 billion below the empowerment line. And that is such a spectacular number that it has the attention of politicians. So to your point, serving the unbanked and also the underbanked is incredibly relevant. I remember in my old company, we launched unbanked services in South Africa. And to our surprise, the very first product that people bought was funeral insurance. And we didn't see that coming. And the reason being is that funeral insurance was a way of passing wealth to the next generation by not passing them the cost of your death. Didn't see that coming.
It's a totally different perspective, isn't it? I've had some experience working in sub-Saharan Africa, in East Africa with M-Pesa, and the impact that a technology has like that on regular people who previously had no access to technology and financial services technology at all. And it's been transformative. And sorry, go ahead.
Yeah, it's all the lives of women. It's reduced physical threat. It's reduced fraud and tax evasion. All of the side benefits have been extraordinary.
And the opportunity to get into microloans. Credit was previously impossible in these environments because we don't have credit data. And so, and you start to realize that credit is at the heart of successful growth strategies for any economy. Credit can get a very dirty name very quickly, right? And to some extent in the West, we're so familiar with very mature credit markets and the downsides and challenges. We forget what it would be like if credit simply wasn't available and how that undermines the ability to grow any economy.
Yes. In fact, Sven used the language of luxury beliefs. Our luxury beliefs are a tax or a burden on those who don't have that privilege. So we can say, credit, risky, shouldn't do it. It's not ours to deprive. Just the fact that we have it, to your point, if it was taken away from us, we would be in uproar. So yes, bringing banking, not necessarily banks, banking to the underbanked and unbanked is a great way of eliminating poverty, fraud, theft, physical violence, tax evasion. It's a systemic way of improving the world. And yes, credit's a very big part of it, as are payments.
And M-Pesa is a good example of, as you said, the distinction between bringing banking versus bringing banks.
Yeah.
That is not a traditional bank product, but it essentially brought financial services availability to a huge population. And that's, of course, been replicated across a lot of developing countries in the world.
And developed countries, right where you are in the United States, more than half of banking occurs outside of banks. If you think about the role of Visa and MasterCard and PayPal and Stripe and Box, and you just go on and on and on. So far, it's outside of banks, right? Banks are increasingly being defined as deposit-taking institutions, which is why many of these companies don't want to take a deposit because they don't want the burden of the additional regulation. But more than 50% of banking is outside of banks.
Perhaps a good point for us to end on is sort of bring it back to where we started and talking about open finance and the optimistic case here. So, if you start to look down the road and you imagine, 4 or 5 years from now, and you think of this combination of a vision for open finance, hyper-personalization of services, putting the customer at the center of this universe, and we have all these technology tools to do this, what's the optimistic assessment here? That this is going to suddenly, it sounds like at the center of it, improve people's lives.
Yes, that is in fact is the point. So our purpose, if you like, is to unlock the potential of people, businesses, and communities everywhere. That is the point, to unlock people's potential, and financial services are a huge part of that. So adding to what you would say, I would say we're looking for a world that focuses on doing well by doing good, unlocking the potential of people, businesses, and communities everywhere. But does it by driving marginal cost to zero while being ultra scalable and ultra secure.
Simon, this is a great note to end on. I say, I think that it's probably one of the most positive outlooks for the financial services industry. And of course, the role that your business can play in enabling that is significant. And I think that this characterization of these technologies as being, I think, as you described your conversation with the students, lots and lots of ways this could turn out to be good, a relatively narrow set of things we should be concerned about. And I think that that's a great way for people to think about the risks and opportunities associated with this. So thank you very much. We really appreciate your time.
My pleasure, Richard. Thank you for having me.
Thanks for listening to the CX Iconoclast from OCX Cognition. Subscribe wherever you get your podcasts so you won't miss any of our thought-provoking conversations. And please get in touch if you want to learn more about what OCX Cognition's predictive CX analytics platform can do for your business by providing complete insights into every account, continuously updated and connected to operations. You'll find contact info in the show notes.